Welcome to the presentation on SBI Cards and Payment Services Limited. SBI Card, incorporated in 1998 as a JV between SBI and GE Capital as an NBFC, working as a pure credit card business company as a subsidiary of SBI. It made use of the great network of SBI and penetrated into the market. And the arrangement continued till 2017 when GE Capital wanted to exit from financial services sector. Out of its 40%, it sold 26% to Carlyle Group for 2,000 crores. And this valued the company as a whole as 7,700. The balance stake of GE Capital was acquired by SBI. Over next 12 months, the company made a rights issue and also had an internal restructuring. Rights issue was at a premium of rupees 80 and the company collected over 470 crores. They had an associate company, SBI Business Process Management Services. It was merged into SBI Card and the amount involved was 95 crores. The combined entity operated very successfully and it grew into the second largest credit card company only after HDFC Bank. And this raised the valuation of the company to 16,000 crores plus. At this stage, SBI and the Carlyle Group, the joint venture partners, decided to have an IPO to facilitate partial exit of Carlyle Group. The public issue was of a massive size, 10,355 crores, but the proceeds, almost 7,039 crores go to Carlyle Group, 68%. And SBI was to get over 2,800 crores, 27%. And company was to get pittance, 500 crores, which is about 4.8% by way of issue of new shares. And market was very optimistic, oversubscription by 25 plus times. But the optimism did not last long as the issue listed at a discount. After listing at a discount at 12% at 661 in mid-March, the share went down to 495 in May, and by the time it came back to the issue price of 755, it was already August. Subsequently, when the price moved along 1,000, the JV partners, Carlyle, used to enter and offload shares as they were outside the lock-in period. And it ended at 970 at the end of June, a return of 80% over 12 months, but as related to the issue price, it was a growth of 28%. But all the while, market was surprised with the offloading of Carlyle. It was evident that the market was bullish as the quantity always sided with the advance rather than decline, except when in March Carlyle offloaded under open market transactions at 986 and in June when they had a bulk deal at 1002. With all that, market was concerned as to the balance quantity available with Carlyle and what will be their moves. Market is really perplexed at the way the Carlyle Group went about bringing down the stake from 26% to 6.54% and the extent of wealth they generated within a short span of 2017 to 2021. The way Carlyle Group went about creating wealth with an investment of 2,124 crore in December 2017 and getting back by offer for sale 7,000 crores in 2020 March, and then with open market operations in March 2021 getting back 3,900 crores, and again in 2 months June 2021 with a bulk deal generating wealth of 4,800 crores. And to top it all, it has got residual holding worth about 6,000 crores in market cap, converting 2,000 crores into 20,000 crores over a period of 3.5 years with phenomenal amount of IRR. The wealth multiplication strategy of 10x is really caught the market by surprise. At the same time, the market is red-faced at the financial performance of the company. The hopes and optimism based on performance in 1920 with sizable growth in revenue and profitability vanished during this year of pandemic. Revenue stagnated, but profits took a deep plunge, taking it back to the levels of 1819, and added to this was the continuous fall in the EBITDA percentage. In a period of operational difficulties, quarter-on-quarter pressure on EBITDA percentage starting from March 20 has worried the company, and it is also concerned with the increasing risk arising from asset quality and growing competition. But the consolation is the company has got a strong net worth, fundamentals and technology achievements to its credit. The company has remained prudent and made heavy investments in payment infrastructure for the entire credit card life cycle. The growth in digital payments and e-commerce is to its advantage. Even the IPO got 500 crores to the net worth, and that way a strong net worth is with the company, which helps it comply with the requirements of capital adequacy ratio with quite a bit of comfort. Presently, it is well above the requirement of 15%, but the concern is on return on assets. Net worth is growing, but not the profitability. In this background, market is always concerned, is the bloated market cap of the company based on high price justified? The upward movement in the market cap from 16,000 to 58,000 to 87,000 and 92,000, not accompanied by profits, and thereby the number of times has moved from 8 to 12 to 70, and even in terms of net worth, which was almost 3 to 4 times the net worth, has moved to a level of 15 times, and this makes the market think that there is a strong disconnect between the valuation and the company growth and profitability, and this has driven the market to go bearish. Considering the retracement levels, the share has bounced back always from the 50% level of 913, and its line of control is at 1140, and it is worth studying the indications from the candles. The price candles appearing below the midline of the Bollinger Band and the candles being lower low next to each other suggest that near-term averages also need a review. On a daily chart, notwithstanding the support coming from stochastic RSI and MACD, the candle placement and the 20 EMA cutting across 50 EMA downwards is suggesting the stock is averse to bullishness in the near term. SBICARD, a great company from the SBI stable, the banking giant. Its IPO of over 10,000 crores, talk of the town. The wealth generated by the JV partner has been quite exemplary, but operational challenges continue to affect the performance of SBICARD. Financial prudence and technological investment is to its rescue, but the valuation is not supported by its earnings, is very rich. Hope you liked the presentation. You can find similar videos at the info card on Stock Learning Simplified. We look forward to your likes, shares and comment. If you are visiting for the first time, may please subscribe the channel and press the bell icon for timely intimation on resourceful videos. Thank you so much for your support, time and attention. A disclaimer: this video is purely for the purpose of information, education and awareness. This is not a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional, need based.